Finally, FOMC is out of the way and we just got a 25 basis point rate cut. It's time to take a look at the charts and see whether or not Bitcoin can move much higher out of here, or if we are about to get a severe rejection. In today's video, I'll be talking about the only level that you really need to pay attention to be able to inform your next trading decisions. If you enjoy the content, make sure to smash that like button and subscribe. Without further ado, let's jump right into the video. All right, so kicking us off with Bitcoin, you can see that we're now sitting above $117,000. This is the long that we've been in for quite some time, but it mainly is a hedge for me as I am anticipating lower prices as we've been covering on the channel. Now, the reason I say this is because we need to confirm above this all-important trend line. So the only level is between 117.5 up to daily closes above $118,000. What I mean by this is the trend line that has been intact for 8 years, and every single time that we reject from this trend line, we tend to get a pretty severe correction. Now, I'm not calling for a massive drop in the market because, as you know, if you've been watching me, you know that I think that we will be having one last leg to this bull market cycle. But what I am saying here is I think that we could have a little bit of a shakeout before we go ahead and move higher. Right now, Bitcoin is flirting with this level. We're sitting right at 117.3K as I'm recording this video, and you can see that we are right below that trend line, wicking above it a few times here. Now, on this Bitcoin chart, you can see why this level is so important, and that is because it is the point of control of this entire range. This line over here is where we had the most volume, the turquoise line, and as I outlined in a lot of my videos, we are actually currently within that potential rejection zone. I'm not convinced from here, because of the moves from the low, that we will be hitting all-time highs right now. Rather, my base case is that we can potentially move lower before we move higher. Now, what would invalidate this and what would allow me to go ahead and close my shorts and double down into my longs? That would be if Bitcoin starts getting multiple daily closes above $118,000, right above this point of control. To me, this would signal more sustained strength in the market, and we will be moving higher and likely targeting this all-time high. I have to warn you though, I am leaning a little bit more bearish as more and more people get bullish at this key pivot point. Now, another reason why I think that we could potentially have a drop, as I've been covering, is tons of liquidity continuing to pile in at the lower levels. If I zoom in here on the 4-hour time frame, you can see that yesterday into FOMC, we had a pretty severe wick downwards, but it got bought up, and now we are getting a pretty decent move to the upside. Again, 118. Reclaiming that for multiple daily closes would tell me, hey, it's time to close my short, and I would likely pivot long, piling more into my current long position, which you can see we had some really strong profits here, $25,000 in realized profit, and we still have just under 18K in unrealized profits. I'll let you know how this plays out. And remember, if you want my own personal trading setups, all you have to do is click the first link in my description down below. It will bring you to this page. Send me a message on Telegram with the word premium, and I would be happy to onboard you into my free trading group. Keep in mind, the only requirement to join this group is to sign up with one of my affiliate exchange links and start trading on there. Now, you can see that we also have some pretty awesome bonuses with Weeks, which is the third link in my description down below, 20% deposit bonus. So if you're looking for some really good liquidity in the market and some very solid bonuses, make sure to join me on there. I also have Bluffin as my second link in the description down below. Now, back to the charts. I really want to see us flip $118,000 if we are to see bullish continuation. I outlined this across many videos. We need to get rejected here if that will be the move to send us lower. Otherwise, my short setup is completely invalidated, and I'm fine to admit that. But right now, you can see that as we stay in this region, more and more people are getting bullish. And this is a cause for concern, in my opinion, because if we take a look at this liquidation map, you can see that there's now over 3 times more cumulative long liquidation leverage in the market compared to cumulative short liquidation leverage. On the right here, just over 6 billion worth of cumulative short liquidation leverage. On the left here on the 30-day time frame, just over 20 billion of cumulative long liquidation leverage. So that's why I actually think that we can go ahead, get rejected, liquidate a lot of those late longs, and then we can go ahead and move higher. To be extremely clear, at this current point in time, I find it hard to believe that we will just explode upwards from here. Now, we also got some more data that just came out of that FOMC meeting. You can see that the Fed is actually signaling around 50 basis points of cuts left in 2025, and they're quite divided here. 9 out of 19 expect 2 more cuts, 2 out of 19 expect 1 more cut, 6 out of 19 expect no more cuts, and 1 sees a rate hike, and 1, Stephen Mirren, sees 5 cuts. This means that it's highly likely that we will at least get 1 cut, if not 2. Bullish for Bitcoin and crypto. I do tend to agree with this, but I think we get that potential shakeout first. And you can see that at the next FOMC meeting, there's now some solid odds for us to get another 25 basis point rate cut, and that will take place in 41 days from now. Let's see what happens until then, because today we actually just got some more data. The US initial jobless claims, the actual was at 231,000, the expected was 241,000. So we were talking about how the labor market seemed weak, but now we're getting lower than expected initial jobless claims. Very, very interesting to see. Now, I also wanted to quickly touch on the fact that Jerome Powell said the Federal Reserve can no longer say that the job market is solid, but let's hear exactly what he had to say in a short clip.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. While the unemployment rate remains low, it has edged up. Job gains have slowed and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles has picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June.
So there you have it. You heard it from the man himself. Let's see how things play out. But ultimately, I do think that more rate cuts will be bullish for risk assets. But my base case in the immediate short term here is that we will likely stall out around the current regions that we're at. I would be surprised if Bitcoin starts exploding from here and makes an aggressive all-time high. But just to be extremely clear, I still have all of my spot holding, and if we do get a little bit of a pullback, I would be adding to my positions in preparation for this last leg of this bull market cycle. Right now, the long is absolutely printing, but let's see what happens. We do have the point of control, which we've outlined in today's video, as well as my previous videos, right around $118,000, and we have the top of this trend line, this 8-year trend line, I will remind you. So I want to see Bitcoin hold back above this level. If we start to experience resistance here, then I would be anticipating that further correction, which we've been talking about. Now, everything I'm discussing is in terms of trading. As I said, holding spot, I'm still convinced that we will be moving higher this year. The question is, are we going to drop first, or are we just going to explode higher from here? And as things in the market continue to get a little bit heated, please make sure that you're not falling for this crap. They're going to send Bitcoin above $200,000, ETH above $15,000, Sol above $1,000, Doge above $2, and all of our shitcoins 100x, and there's nothing you can do about it. These are the kind of tweets that get people wrecked. To be perfectly clear, I think that Bitcoin hasn't had its final all-time high of this cycle, and as I've said several times, I think we'll probably top out between 130, maybe all the way up to 160, but that's relatively optimistic. I find it very unlikely that all of these targets will be met this bull market cycle. Maybe that's just me being a realist, but I want to keep you level-headed in this market, because if you truly believe that these things will occur, you'll likely get wrecked at the end of this cycle. And that sums up today's quick video. Pretty standard FOMC meeting, 25 basis point rate cut, nothing out of the ordinary, But we're now seeing that Bitcoin and assets are continuing to trickle on up. Is this the point of rejection, or are we going to see bullish continuation from these current levels? If you enjoy the content, make sure to smash that like button and subscribe, and I'll see you in tomorrow's video.